Ladies and gentlemen, everyone wants to work with businesses that can afford to pay them $30 to $100K a month for their agency services. And in this video, I'm going to share with you my top 3 methods for attracting Fortune 500 clients that can afford to pay you that $30 to $100K a month. Plus, I'm going to explain to you why these clients are easier to work with than the small businesses you're working with right now. If you don't know who I am, my name's Nicholas Kirchner. I'm co-founder at Hydra. We're a multi-million-dollar management consulting firm for advertising agencies, and I'm a 3-time agency owner and exited my first agency when I was 21 years old. And in that time, I've worked from mom and pop businesses all the way up to Fortune 50 clients, managing multi-million-dollar a year budgets for them. So I know a thing or two about working and attracting whale clients that can afford to pay you $30 to $150K a month. And in this video, you're gonna learn how and why they are precisely different. Now, the truth is, just landing one of these names can completely change the trajectory of your agency's growth. Just imagine someone visiting your website and having a logo of a Fortune 500 company that you have done advertising work for. This is going to grant you instant credibility in a sea of mistrust in the agency market. And the truth is, now more than ever, you need more trust and credibility to be able to close clients consistently. So without further ado, let's get into it. Now, if you do enjoy the video, it would mean the world if you would consider leaving a like and a sub, as I'm just starting my YouTube journey and it helps a ton. All right, now let's make some money. Here's how to get paid $30 to $100K a month in retainers from clients in the Fortune 500. Now, over the course of my career, I've had the privilege of working with several Fortune 500 companies, including Petco, Yahoo, Marcus Hotels and Resorts, and Northwestern Mutual. So I know a thing or two about landing whales and how they actually work. So if you're charging $2, $5, $10K a month right now, why would you even want to make the pivot to enterprise? Well, few reasons. Clients in the Fortune 500 paying $30, $40, $50, $100K a month is simply a rounding error on their balance sheet, okay? So if you were to try and charge this amount to your current clients, they would be like, no way we can afford that. Large businesses just think different. They have larger budgets. This is not a lot of money to them. Secondly, larger clients value other things than just conversions, which transparently makes getting results for them a lot easier. They don't care about just conversions and ROAS and CAC. They are looking at CPMs because they know that attention trickles down into revenue for them. And so it's not as focused on the direct revenue impact. Also, larger clients pay you more, give you a logo and a blue chip name to put on your website, your pitch decks. This makes attracting other good prospects and good clients very, very easy, because if you work with a Fortune 100 brand and then you're going to a small business, well, if you're good enough for the Fortune 500 company, you're sure good enough for the small business that you are talking to. So definitely something to keep in mind. This is a huge growth factor that's going to make pitching and closing business a lot easier. Lastly, Fortune 500 clients are not needy, right? You're not working with a founder who's anxious if, results change day to day, week over week. You're working with a marketing department of dozens of people that all have a specific role to support you and make sure that you succeed. So overall, they are easier to work with. They can be demanding, but they're not needy. Also, let's talk about the dynamics of how big companies buy advertising. It's different than small businesses. Number one, ideas are king, right? Success breeds complacency, even for the biggest businesses on earth, right? Maybe they've had the same people in those marketing seats for 10, 20 years, and their ideas have gotten stale, okay? Big companies hire agencies for fresh ideas, number one, okay? They want a new perspective because their team has flown too close to the sun. Also, Fortune 500 moves at least 3 to 5 years behind smaller, scrappier brands, okay? So if you're in D2C e-com or you're in lead gen, no shot they're implementing the tactics that you are right now, because they're big, they're bureaucratic and slow, which brings me to my next point. Bureaucracy hinders progress. And it might take 3 to 6 months for them to get one piece of creative made or one landing page made and approved, not only from their creative department, but from their legal department as well. So demonstrating how you can get them to operate faster is going to be a big value add for them, making sure that they're compliant with legal and showing them that, hey, we got speed and we can take your current output from here's where you are right now and triple it over the next several months, okay? That was a big way that we landed business at my last agency, is that we were just simply faster. Number 3, walking the walk. Working with bigger brands almost has a certain look and swagger to it. Now, what I mean here is that during the pitch process and during the client fulfillment recruitment process, they expect things to be differently. All right. Brands know when they see it in an agency and they know what they're looking for. What they want is different and new, but they want it to feel familiar. Okay. Confidence in your team is also everything. If you're a one-man shop, two-person shop, you're likely not going to be able to land work with these brands because they need to have the confidence that your agency is of a size that you can actually handle the scope and magnitude of the work. So some precautions if you choose to go down this route. Now, I personally think going after whales, going after Fortune 500 is one of the best things you can do for the agency because it builds your name, your credibility, and actually puts you in the sphere of larger advertising agencies. But the downside to that is number one, client concentration. So becoming solely dependent on that revenue to support the payroll of these employees that you might have to hire can be a downfall. So for example, if you get a 100K a month retainer, it's likely that you're going to need more team. Well, if the client leaves, then you're going to have to get rid of that team because they were directly responsible for supporting that and were likely dedicated team members. So if the client leaves, the entire team gets fired. I had to do this with Yahoo. We had to lay off 6 people in one day. Not great. Okay. Secondly, having 25% or more of your revenue coming from one client is a massive vulnerability. Number 2, protect the house. Okay. So just because they're a big company, don't go broke servicing them. All right. Being a vendor for large companies is another line item in their accounting department. You are not special. They will take their time paying you and sometimes on unideal payment terms. So it's very hard to have leverage or priority in their eyes unless you have a deep relationship. You're best friends with their accounting department and the decision makers over there. So just understand you are taking a risk in terms of when you are getting paid. Now, also, these deals can take months, multiple months, years to close and nurture. So my recommendation is to hit base hit, and you might spend weeks or months preparing a pitch only to lose to another agency. So you need consistent base hit clients. So if you're charging 5 to 10K a month right now, don't stop going after those clients just to look for whale, because this is a quick path to starvation. I like to view Fortune 500 clients as good, I like to view Fortune 500 clients as good business on top of what you're already doing, not in replacement of. So this can benefit you, but it can also cripple you if done incorrectly and you only focus on the whale. So right now you're probably thinking, well, that sounds great. I want to go down this path. I want to sign 100K a month retainers. That's great. Well, how are you going to find an in, right? That's the core question that I had when I was getting started. So there's 3 primary methods for enterprise client acquisition. Number 1, outreach. This is okay. You're going to have varying degrees of success opening up opportunities because large businesses are highly relational in who they trust. Number 2, the RFP process. This is better, but also comes with its own challenges that we'll get into. And then affiliates or partnerships is the best avenue to be able to land these deals. We're going to go through all 3 of those. So if you look at an enterprise org chart, you got your CEO up top, you got your CMO, and then underneath the CMO, you got your VP of marketing, your CCO, or just marketing executives. Now, understand that we're not wanting to target the CEO or the CMO necessarily. We want to look at the channel managers or the mid-level management layer, being the VP of marketing or the chief creative officer or the creative director, because they are typically the ones actually signing off on the purchase decisions at these larger companies, and they don't often need CMO or CEO approval, because in enterprise organizations, they get a budget from the CFO and they say, here's your marketing budget. You allocate this in whatever way you see fit to get the company results. So oftentimes, if we talk to this mid-level management layer or this executive layer, they don't have to go for approval. They can just stroke you a check for the project and for the scope that you're actually going after, which shortens the sales cycle a lot and makes things a lot easier. So when you're targeting those decision makers, make sure you're thinking optically, okay, what title do I want to go after? So the best method to attract these clients is going to be an agency affiliate network. Now, people have been in their careers likely longer than you've been an agency owner, and we're going to use this to our advantage, right? So one of the best moves we ever made was building out a team of affiliates and befriending internal employees at brands. Now, this works best for enterprise clients because of the ticket value, but this can work at any level, and it's a client acquisition strategy that I totally recommend for your agency. Now, what does this mean? Well, we need to identify who the power brokers are in our niche, okay? So if we can go to people of influence who hold the keys to those relationships and they can walk us in the door as their social partner, as their digital partner, as their lead gen partner, that's obviously a lot higher leverage than us sending a cold email and hoping that we get a response from a company of this size. So let's say you're an agency here in the middle, you serve serve D2C brands right now. You could go to your clients and they could become affiliate partners for you, right? Like, who do you know? Hey, we'll pay you on any business you send our way. Venture capitalists, right? They have portfolio companies. They work with other businesses. They have relationships. Private equity groups, portfolio companies, other businesses, angel investors, investment banking groups, manufacturers of products for Fortune 500 companies, third-party logistics companies, payment processors, SaaS companies. Think about who holds the keys and who already has a relationship with my client right now, because that's exactly who we're going to want to be talking to and forming relationships with and saying, hey, we will get you in on the deal with us if you can get us in the door. So by giving up a small percentage of each contract, you're going to shortcut everybody trying to bang on the door and get in when they can just walk you to the boardroom table by giving them 10, 15% of the contract value. Now, we've been able to close $1 million deals off this method alone. Now, if you're going to commit to building an affiliate network, you're going to actually need to nurture it. This is a contract sales team, and I recommend calling those affiliates at least once a month to see what's new with them, how their business is going, and any changes to your service offering. Just like with a prospect, you need to stay top of mind, and they need to know that the economic opportunity and reward is there for them. Next, hire people with business development experience, right? Hiring someone with experience and selling to enterprise company is extremely advantageous. So what do I mean? Well, let's say you recruit or poach a business development person who sells trade booths for the Consumer Electronics Show, right? One of the biggest shows in Vegas every year, or other large conference series that regularly attract Fortune 500 companies. They can bring those relationships to your agency when they start. Now, obviously, caveat, this is dependent on their employment agreement with their previous employer and solicitation and things like that. So make sure you vet that out. Method number 2 to landing enterprise clients is the RFP process. RFP stands for request for proposal. Now, before issuing an RFP on the client side, they're going to identify its needs, its goals, and their budget, right? Then they're going to develop the RFP. So they're going to put together a document that has, here's the scope of work, here's the objectives, the timelines, the budget, and the criteria for the vendor selection, okay? This document is the RFP itself. Then they're going to select agencies that they want to circulate this RFP to and get responses from. So now what you're going to do is, once you're on their list for RFPs, they typically come out once a year for specific services, you are going to have to put together a deck or a proposal answering all the questions in the RFP. Now, this is where you're going to be pitching your services and your agency as a whole on how you're going to get them to the end result. So you are competing with other agencies directly in response to this RFP. So that's an important piece of this to understand. You are going to be sinking a lot of time, energy, and attention into this with the chance of not landing the business. That said, obviously, these are highly competitive contracts for a reason, because they're good contracts and they're good work typically. Now, how do you get on the list to receive RFPs? Well, you're going to need to work your connection game either through affiliates, or you're going to need to do outreach. Let's say you reach out to a brand right now that's an enterprise company and you say, hey, here's what we do. They might say, hey, not now. We actually already have budgets finalized for this year, but we'd be open to getting you on our list next time an RFP comes out and having you take part in that conversation. So that's typically how you're going to get these opportunities. Now, method number 3, which ties into here's how you can get affiliates, here's how you can actually get RFPs, is going to be LinkedIn outreach. And you're going to need LinkedIn Sales Navigator for this approach, but the goal is to directly reach the decision makers thanks to Sales Navigator. So we talked about that mid-level org chart that we want to hit. Those are the types of job titles I'd be going after in your niche. So now that we got the attraction piece figured out, how do we actually sell this deal? Well, we're going to get an introduction. We're going to go through a discovery call with this prospect, right? And our capabilities deck. Here's everything that we can do. Then we're going to respond with a custom pitch deck and audit perhaps. Now, this depends where the lead comes in from, because if it's an RFP, you're going to be responding with a custom pitch, right? Now, if this is just a sales call opportunity that you're booking through DMs or through an affiliate, you're actually going to go through this discovery call and capabilities deck. But with an RFP, you're already going to know all that information, so you're going to skip to this. Next, we have the pitch presentation. And I can't hit on this enough that if you can get on a plane and go, you're going to want to get on a plane and go there and present in person, right? This is the differentiating factor between small businesses and large businesses, is the buying experience is different. There's obviously more time, energy, attention, resource put into it, and that's the expectation. Next, we would always include an additional creative teaser or concept or piece of content that we wanted to include to really drive home, hey, we are the right agency to do this, and we did our legwork. Then you're going to follow up, you're going to close, and you're going to onboard. Okay. And I would expect this sales cycle to take anywhere from 3 months to 12 months. For the size deals that we're talking about, anywhere from $500,000 to $2 million a year contract. Now, when you're going into these situations, you want to understand your goal is a piece of the pie so that we can work with this company, get their logo on our site, in our pitch deck, etc. But it's not the whole thing. Now, what do I mean by the whole thing? Well, I don't want to come in there and say, hey, I want to handle all your marketing. Your agency probably isn't the size where you have full service to be able to work on all the aspects of their marketing. And I want to go in with just my core competency. Most big businesses or most enterprise companies are also working with an AOR, or an agency of record. Now, the agency of record is an arrangement where an agency has an exclusive right to handle brands' marketing and advertising needs. So they are the full service provider. Now, the AOR is usually the sole agency responsible for the advertising needs of a particular client. That means from creative to design to media buying, it's handled by the AOR. So what I'm looking for is, what is the gap in the AOR's offering related to my service that I can come in and do? Is it an audit? Is it a concept? Is it some sort of strategy work that can lead to a bigger opportunity later on and maybe take some of that business away from the AOR eventually? Typically, these are year or multi-year agreements. So you're going to have to think about this. So you're going to have to think about this strategically and how we're going to get a piece of the pie, but you will shoot yourself in the foot if you go in looking for the entire thing without building a relationship. So the solution to this, and what I did, is sell the strategy or the audit. Now, strategy is the actual work that goes into preparing to provide a world-class service before you go and execute it. And it gives you that foot in the door. So strategy is the thinking time that goes into the project before you're actually executing, right? So if you offer ad creative, think about all of the storyboarding, the shot list, think about the concepting, the storytelling that you're doing before you actually go in and execute the shoot. That's what you're selling up front, getting buy-in on the concept, and then they buy the execution afterwards. So understand that you would be charging in this case for your internal meetings, your onboarding conversations, your research on the existing brand, its positioning in the market, competitive analysis, reading reviews, creative concepting, determining account structures. All of those things can go into the strategy or the audit no matter what service you offer. Now, what's the benefits of selling strategy? Well, you get alignment with the C-suite from the beginning on what the engagement is going to look like, and this is what we're going to execute. Also, your execution is going to be stronger if you're able to bring in the internal marketing team while things are ideated versus waiting for revisions on the final project, because let's be honest, enterprise clients typically are pretty picky with their brand guidelines and all of that, and legal red tape and whatnot. So you're probably going to have more revisions than usual. Now, we had this strategy component as a mandatory requirement to work with us because it worked handsomely at vetting client quality and making sure what we were going to produce for them actually fit their needs. So nailing the pitch. This process is different from selling to a founder because your internal employees' desires are fundamentally different than founders. So for example, small business founders are looking for growth in their business because it might be more personal pride, better lifestyle, or getting closer to an exit for the business. Whereas with an enterprise company, a VP of marketing is trying to look good to the CMO, the CEO, or the president so they can receive additional budget next year, so they can upgrade marketing tech, explore a new type of campaign or a new channel they've wanted to try, but they haven't had the internal support or the budget for up to this point, right? So when pitching bigger clients, also understand there's a lot of internal politics that go on behind the scenes. For example, with the VP of marketing position, they're interested in keeping their job, all right? They want to look good to their boss and say, hey, I picked this agency or this concept and look what it did, right? They're not worried about their personal income going up like a founder necessarily. They're worried about keeping their job looking good and getting promoted eventually. So if they make the wrong decision, hire the wrong agency partner, and come short of their goals, it's not just the agency that's getting removed, it's likely their position as well. So keep this in mind. So we talked earlier about a capabilities deck. This is going to be the first sales touch point that you are presenting after your discovery, right? So let's say we get an enterprise brand on the phone. We want to go through what it is that we do and how we do it for businesses at a high level. So this is your opportunity to display what your agency's positioning is, what it's not, and your unique advantages as an agency. So this deck should effectively answer, are you the right partner partner to handle their needs right now? What are our core competencies? And why are we better than everyone else at the service that we're providing? And who have we done it for? So all of that is going to be included inside of the capabilities deck itself. And you can see that we're baking in case studies to this, and I will have the template link down below if you want to grab this capabilities deck. So let's talk about the customized pitch deck. This is really where the presentation comes to life. Now, this is after we've established that they are a good fit for our services, and we want to prove to them that we can solve the specific problem set that they have going on in their business or that channel right now. Now, I'm not going to go through this whole deck because it gets really lengthy. It's around 50 slides, and I'm going to have the presentation deck down below so you can go ahead and fill this template in for your own agency should you want to go ahead and pitch enterprise level company. Now, some presentation tips though. Make sure as you're going through this deck that we're moving through our slides at a pace that's comfortable but not too slow. Understand that they're reviewing thousands of slides from RFPs or from other pitch decks, and I want to make sure that we are moving through quickly and not focusing on basic information. They typically only need to know a few things on whether you're going to be the right partner or not. Alternatively, you can give them the presentation clicker and have them move the presentation at their own speed. That way you're not having people sit there like, okay, I get it, let's move on. Secondly, following up. It's a delicate dance with larger clients because you want to be aggressive in your follow-up, but you don't want to come across needy and desperate, right? Because big companies, to them, this is a turnoff, right? They like to work with agencies, like I said, that have that certain swagger to them. They think that they are going to get the end result, but they're not needy begging for the business, right? Because that's a red flag. Well, why does this agency need our business so bad if they're doing well and they have all these other clients that are equivalent size to us? So the best way to do this is to revisit points in the deck that they pointed to needing a solution for, point to getting something done before the end of the quarter or the time of year or the fiscal year, since that's how big companies typically make decisions, and also passing along more sample work that you've done for clients of an equivalent size, asking, hey, is this thing or goal still a priority for you? All of those things are appropriate follow-ups. Okay, so questions, right? The way we want to structure our decks are going to minimize the amount of questions we get at the end of the presentation by design. So this is going to allow you to cover the most commonly asked questions like reporting terms, timelines, approvals on things, all of the nuts and bolts of how you're actually going to work together, and key things that these types of clients are going to want to know. So in summary, compliance and admin items, make sure you have those ironed out beforehand, right? Because all of these things do, whenever you say, oh, let me get back to you on that, is you lengthen the sales cycle. So I want to put as much of that into the deck as possible. Now, bigger brands don't take legal lightly. So when it comes to your contracts, typically they're going to have a legal team review it, making changes to it, refining it, redlining it. Make sure you also have an attorney on your side, structuring those engagements for you and making sure that you're not being taken advantage of. Lastly, make sure your payment terms are not north of net 30, because each company does pay vendors differently. But if you're a small business and you need to collect the cash, you can't have, let's say, $50,000 for one shoot going out 1 month and not getting paid for that work till 3 months later. It's going to be very, very hard for you to float that type of cash. So make sure that you negotiate your payment terms pretty rigorously because they will try and push it out, typically 30 days or more. All right, so a few notes on pricing your work. Understand that enterprise clients, like I said in the very beginning of this video, they don't view money the same as small businesses do. They're used to paying top agencies 5, 6, and 7-figure monthly retainers for services. And a little bit of a personal story here. I knew an account manager from one of the largest firms in the world who said that they charged a very famous company that you know of, but not allowed to say, $25,000 for 2 static photos on Instagram. So if you underprice yourself, you're showing them that you're not experienced working with clients of their size, and that seems abnormal for them. Understand that they view money and budget fundamentally different than small businesses. Now, the caveat to this is understand these clients do require more TLC and attention than your smaller accounts, but they're easier to deal with. But I want to be honest that they do still take time, and we need to make sure we're compensated for that time. So if you're used to pricing small businesses at 2, 5, 10K a month, make sure you get this gut checked by someone with experience who knows what the ranges for these types of projects are going to be that they're seeing. Because if you come across too cheap, it almost comes across like, oh, you don't have a good team, or you must not know what you're doing, or is this real? And that's feedback that we got personally from one of these clients early on in our relationship, is like, this just doesn't feel right. And it was because we were way undercharging for what they're actually used to. So make sure your price is on point. point. Now, what are some final thoughts on this, on working with enterprise? And if you're still here at the end, then you deserve to win some enterprise business, because I understand some of these things aren't as tactical in your day-to-day as you might be used to, but getting in the door with these businesses is hard, right? But with what you just learned, you're going to have a much easier time breaking into working with these types of clientele. It only takes one Fortune 500 client to change the trajectory of your agency, because once people see that you do good work for them, once again, businesses of an equivalent size also want the new fresh thing that other big companies are doing. And once you've proven that you have the competence to work with them, this is going to be very ideal for you. Secondly, it can be difficult, slow, or costly to win these opportunities, but it's worth it. Like I said, landing one name can change the trajectory of your business forever. And landing enterprise business is the definition of playing the long game. Look, if you're in the agency space and you want to build a business for 2, 5, 10 years, I recommend going up market. All the best opportunities are up market. Larger companies, bigger retainers, lower churn, better relationships, all of the things that you set out to build in the beginning with your agency. So hopefully sharing this has been helpful for you and you make a leap to considering closing enterprise deals. It is very exciting and a little bit higher stakes game in the agency space. So if you have any questions, drop them in the comments down below. And I have to say, over 99% of you who watch my videos are not subscribed, and I'm going to be dropping a lot more agency growth content and high level strategies like this. So it would mean the world if you left a like and a sub for me as I continue to build this out. So thanks so much for watching. I'll see you in the next video.